Hello again, everyone, and welcome out to another currency recap. This is Ankit here, and we are covering the markets for August 22nd. It's a Monday, so let's get down to it. Let's take a breakdown to this market price action and set up ourselves for the next 24 hours. So let's do a quick market analysis and see how things moved today. And today was pretty much a bloodbath across the board in the currency and the equity markets. The currency markets had a whole different price action, but this is where we will talk about a little bit of that disconnect in that, well, in the correlations there. But SPX down more than 2%. The stock markets were down 1%, and we've seen the cryptos down. Gold was down and oil was mildly up. So as we take a look at the charts, and we discussed this in the currency room, we are now testing markets, and actually the prior resistance and now support, it seems like it's kind of broken here. So this would have been the first line in the sand here, and to see if this kind of level holds. But then you can see that today we didn't really see much defense come off this level, and we actually closed it below the 50-day moving average, the 20-day moving average, and we did close below this the resistance line here. So at this point, the markets will aim for a bit of this downward area over here where we had prior consolidation, but today was definitely a big move, and I think the next 24 hours we could consolidate some of the losses here and maybe trade in this little tiny range before we can figure out how much further we have to fall. But the price action so far actually a lot bearish across the board. Same thing in the World Stock Index. We've actually given up that moving average there. So this bounce that we had that was promising across the board, even in the Bitcoin, in the cryptocurrency world. You can see that we talk about this little area that we consolidated for the longest time, but again, not getting the breakout to the upside, but we're getting a breakout to the downside. So this is the market conditions where we could see this rally seems like it wants to kind of derail here, which is not a good sign, especially if you're trying to look for some sort of continuity here in the market. So we are definitely in this little slippery zone here, and I think as we go into the Labor Day weekend, and after that, I think this is where the markets for the next couple of weeks to till the next FOMC press conference comes out. I think there could be some volatility, as we noticed that the VIX, the volatility index, did rise up as well. So this is a time to bring the market expectations down. I think if you just take a look at it, this thing change. We are actually given below the moving average here. That's in the red here. They're still above the 50, but overall a pretty mixed picture. So I think this is where bringing the market outlook to zero, we can no longer be as bullish as we were just 2 weeks ago. But at the same time, we talk about not to be jumping the gun here and not be too bearish either. So we have to see which side wins. This is a holiday. This is what we call the thin liquidity environment, as we are in the summer trading in. So we could see some of these moves kind of get stretched a little bit before we can find some more of that volatility after the Labor Day weekend. So this week, again, not a busy week when it comes to news events, other than the fact that we have an important Jackson Hole Symposium. That's again on a Thursday. Markets again could be jittery around that time, because there's always that expectation that there might be something that come out of those symposium, and see if there's big movement off of it. So I think, of course, right now the central banks are what really causing these moves, and it's important when you have all these central banks are gathered together in one place. So I think that will be important in the next the Thursday and Friday. But early on, we have tomorrow morning the PMI figures out of the Eurozone. So something we'll keep an eye on. Again, Euro is already very weak, so we don't expect much out of this. But again, we'll have to always continue to watch these reports, just in case if there's a bigger surprise or there's a bigger disappointment, we always can get a bigger movement off of that. But outside of that, you can see this week is not as busy of a week as it was last week, with a lot of central banks announcements. So let's do a quick currency analysis and see how things are moving percentage wise, and so we can focus on what's really making a big movement across the board. You can see the crypto world, it was a pretty mixed picture. We have Bitcoin and Ethereum down, but we also had the Bitcoin Cash and the Litecoin up. Outside of that, again, Solana was down, Cardano was down. So overall, I mean, we have these two cryptocurrencies that stands out, but overall the trend is still onto the downside. So there's no real better way to code it. I mean, the pain still remain across the board. And as we were in that big rise in the cryptos, I think that's kind of given up over here. Now let's go into the currency market. And this is where if somebody just pay attention to correlation would say, like, this doesn't make sense. The dollar is up, so did the Aussie, so did the Kiwi. But then we had instances last week where the dollar was up, but then Aussie and Kiwi were the weakest. And I think this is the kind of price action you should expect around these times of the year when, you know, we are at a peak summer trading. There's less liquidity out there, which again improves after the Labor Day weekend. So this is where it's better to pay attention to relative strength of weakness compared to what should happen, because you know, this is where you can see the CAD did not move much. You know, CAD was a better performer on Friday, but clearly that did not carry into that relative strength in the price action today. So there's that tug and pull in some of these currencies. But outside of that, there's one thing that has worked out really nicely here is the euro and the dollar. I mean, euro take another dip lower, breaks below that key parity level at the dollar. So we are now seeing euro trading at the levels that we haven't seen. And again, this is you know, new for a lot of traders, or, you know, seeing some levels that you haven't seen before. We have already seen this thing happen again. Euro against the Swiss franc, same thing, hasn't really traded below the certain levels. And I mean, we have been on a tear. I mean, I think euro Swiss franc sitting at about the 95 area. So there's definitely that relative weakness in the euro. And while the euro takes a hit, I mean, other currencies are not really taking a hit there. Like the Aussie, actually comparing euro against the Aussie or euro against the Kiwi, you know, give you the same results as euro against the dollar. So which is kind of ironic here. But again, this is the kind of market conditions that we are going through. In Swiss franc, which was a better performer but did not have a follow through. So notice one thing is that all of these things kind of move in a tandem. So we see the CAD and Swiss franc kind of perform the same. But then today, when both of these movements were absent, and we saw more pullback, more pullback in these currencies. But then we have Aussie and Kiwi, which actually were pretty bad performer, and then they actually both rose at the same time. Remember last Friday we had a big disparity between Aussie and Kiwi. Kiwi got hammered, where the Aussie held in. So this is where you never know what the next 24 hours will bring it. Maybe we'll see one currency takes a hit more than the other, but that's just the market conditions that you'd have to deal with for the next couple of weeks. So as we take a look at velocity scores, I mean, it's pretty evenly out over here. I mean, we have the biggest one is really sitting on two sides, -3 and +3 is the euro dollar. But outside of that, surprisingly, we have Aussie as a +2 and a Kiwi as a +1. And again, in an environment where equity markets were down 2%, I know some traders don't feel comfortable buying this. But again, this is where if things are not really panning out the way it's supposed to, it's better to stay out. Like I always say, when in doubt, stay out. So this is where it's better to pay attention to relative strength weakness than these correlations. So we'll have to see where Aussie and Kiwi goes. But so far, that's what the momentum is. We had the Swiss franc, which kind of moved towards the left, but that's one of those currencies that it's not really moving as much to the downside as it is the euro. I mean, there's definitely that the divergence that's taking place. So I think if you want to short, I think euro still remains a better short compared to the Swiss franc. Now, CAD seems like taking a pause, but again, CAD is one of those currencies that's really inconsistent with its movements here. I mean, there are some days, I mean, if the dollar was strong, the question would be like, why CAD wasn't strong? But there you go, CAD was actually not. So there are days where they diverge, and there are days they're always moving in the lockstep here. So the way to trade this is that just focus on relative strength of weakness, see what's moving, and if it's not really following it, there's no reason following that kind of correlation if it's absent for that day, because we might not see that return for a following day. So let's take a look at possible trades and then see what the charts are telling us. There's one thing in charts that we can see. I mean, I've been keeping an eye on this this expectation for Fed to hike rates. As you can see, that the expectation has kind of improved. We've gone to about 53% compared to just last week that was sitting about 47%. So expectation is still high for the Fed to remain hawkish. So that's just the theme here. But outside of that theme, there's currencies that are continues to get hammered, and there are currencies that just continues to be trading back and forth. So we have the euro, and I think I'll start with the euro. I mean, you can see the euro is, as a currency basket, is moving lower. So even though if you can find an entry in the last 24 hours in euro against the dollar, but again, euro against the Aussie or euro against the even Kiwi has actually done decent. So Aussie, euro Aussies, you can see that we got a support right here on the daily chart. So if you can breaks down further, I think there's definitely more downside. It's all about pairing the right currencies. It doesn't have to be with the dollar. You have to pay attention to what the currency is doing, not just one single individual pair. If the currency basket is on a move, then it doesn't matter what we pick. I mean, we can see that in the same time, the euro dollar is down. And even though the yen did not perform as much in the past 24 hours, you can see even the euro yen kind of looks weak. So this is where focus on what's moving and just pair them accordingly, because there are certain other currencies that are not moving. I mean, yen is a good example. Today was a big risk off day. As you can see that the currency did not move. It actually been moving down. On the other hand, there are periods in between where it did run. I mean, we had runs in between, but right now, not really finding that run here. So it means that the yen is not really the right pick here. And even the Swiss franc, which, I mean, you can see that it's been in a nice little uptrend here. It's pulling back on a daily chart. It's still above that. So it can't really get short at this point. The only case you can make is that we got a breakout here, and we're just pulling back a little bit. So this could be just a short-term pullback. But this is where I want you to pay attention to Euro Swiss franc, because if you're trying to short the Swiss franc, I think Euro is a better short, because Euro Swiss franc is in this still big, massive downtrend. I mean, you can see where, when it broke that level out at the parity level, I mean, we are already down about 400 pips since that level. And this might continue, because so far, every rally, or every base, or every rally is being sold off. So Swiss franc, again, not really the best pick here. I think Euro probably be the better pick for the short side. Now, pairing against, euro dollar, I'm sure there's a lot of traders looking at this. You can see that it's sitting at 99.42. So this has definitely made a new low. But again, same thing. At this point, there's not a whole lot of defense at the parity level, and we have actually clearly broken below. So at this point, I think better to be looking at euro dollar on the short side. There's no sort of reversal in sight here. I think these little bear rallies that we could see or could be really short, could be sold off as well. Now, other currency pairs. I mean, we have Aussie dollar, which you can see that it's just consolidating a little bit. Even though a day like today it did not take part in that move, it just consolidated. But one of the pairs that I've really been watching, because we had this divergence taking place in the euro Aussie Kiwi, as you can see that we are now at the resistance level. So if you're trying to decide between Aussie and Kiwi, you can see that this is a massive level of resistance, and a lot of times we have actually reversed that. So when you look at this range bound trading principle, you say, well, in the range bound trading, I want to be the seller around these areas. So at this point, I have to be very cautious if I'm trying to be trading this the upside, because this is a massive breakout area that you're talking about here, months of consolidation. But overall, we have seen a better price action on the pullback off that resistance here. So the Aussie Kiwi, pay attention to it, because that would be a something to pay attention to if you're trying to decide if should I go with the Aussie crosses or the Kiwi crosses. Like last Friday or last Thursday to Friday, I mean, we saw a massive sell-off in the Kiwi, but then the Aussie held. So I know that was where a lot of question was, that why did Kiwi sold off? Again, in these market conditions, we could see one currency gets hammered or gets picked up, and the momentum just continues to be on the downside. So your job is just to make sure where is it happening. Today, Aussie and Kiwi were mostly performing equally. I mean, Aussie was slightly better, but you can see Aussie Kiwi didn't really had a big difference there. But if you're trying to look for what's outperforming and underperforming, keep an eye on the price action and see if there's a more continuity in that space, because in this condition, continuity is really the key. If you're trying to decide, okay, should I go with the dollar here? Again, the question comes to same thing, continuity. I think right now we are on a solid 1, 2, 3, 4, 5, 6. We have a solid run in the dollar here. So we are slowly getting up to the upper end of this resistance on the RSI, and we got the resistance right here. So in the meantime, the short term, it seems like this being long with the dollar seems like the right play here. But outside of that, what pairs actually do looks the best? I mean, all the dollar crosses, you can see we got the dollar Swiss franc is making a nice little rally over here. Now it's in the upper end of this range that we've been dealing with. You can see that the upper end, dollar is the upper end of the range, and 95 is the bottom end of the range. So this has made a nice recovery. So I think a small little pullback would be nice to kind of jump back into. But like I said, in these conditions, just trying to find out where is the movement and what we need to follow. We had similar movements. I mean, we had big breakdown, and now Kiwi CAD is making a consolidation over here. We have the Aussie CAD also make in this consolidation phase here. But at this point, can we take enough information from CAD and say, well, is CAD's going to break out tomorrow? I think it's tough to say that, because there's just that choppiness and the consistency in this, where you can go with the past information, but that will result into further continuity. So I mean, right now on a 4-hour chart, we see the RSI falling, but the price action is holding it there. So I will kind of wait till tomorrow. CAD is definitely a better pairing during the day in the US session than more in the Asian session. So in the Asian session, mostly Aussie and Kiwi will be in play. And right now, the big focus for me is really in this Aussie Kiwi, which based on this level, I mean, it looks like it wants to break out. So if you're looking for a failure, then we need to see something that happened over here where we get this big tail, and then that causes a massive reversal. So right now we are in the upper end of the range, but we'll have to see which places goes. And lastly, the dollar yen. I know I had some traders that were looking at dollar yen, and you can see that we are on a very nice positive momentum. I mean, look at that. We've gone from 132 now to 137 and stays positive. So at this point, at this rate, I mean, it looks like it wants to test that 138 area. So being on the long side dollar yen seems like the right place to be. But we'll have to kind of see if this move is coming to an end, or if there's better pairs that we can find. So in conclusion, I think this markets, you want to be very careful and look at relative strength and weakness more than what should happen and what should move, because you get that randomness and just in this kind of market condition. So we'll probably expect a similar thing in the next 2 weeks before we can figure out which way or where the big breakouts take place. And equity markets, I think, will consolidate some of the losses after a big move today. So pay attention in the next 24 hours. Again, lots of content coming out, so check out the schedule, and we'll see you in the next update.